Let me ask you a question. How confident are you that your payroll is 100% correct? Most business owners think they've got it right until the ATO sends them a letter saying otherwise. Maybe you've underpaid super. Maybe your payroll software is set up incorrectly and you don't even know it. Whatever the mistake is, the result is the same. Hefty fines, back payments, and a payroll mess that takes months to fix. That's why I ran a payroll compliance training session for my clients, which I'm also sharing with you today. In this deep dive, I covered the most expensive payroll mistakes people make and how to avoid them, how to ensure payroll deadlines, tax withholdings, and superannuation payments are compliant, and how to interpret awards and enterprise agreements. Let's get into it. All right, who's this session for? So if you're coming here for payroll, obviously, most likely you're a business owner, most likely you're your bookkeeper or accountant. Some of you guys are my team members, and or some of you guys are doing the admin and operations of the business. So that means that you're taking care of HR and a payroll. So this is great for you. It's also great for business owners as well. So if you're asking, it just depends on you and how many questions you guys want to ask as well. All right, let's jump into it. Payroll. First thing I want to mention is not everyone knows how to do it. Businesses are legally required, however, to be able to record all their payroll on time, do it properly, pay on time, as well as have all the documentations for the next 7 years. So when you employ someone, which could be yourself or other external employees, or could be family member, you're actually supposed to keep the records for at least 7 years. Crazy, right? No one actually tells you that. The crazy thing about payroll is that it's probably the most amount of documentations for businesses. Okay, the reason being is because you have to record pay slips, you have to do accounting software and lodge like single touch payroll. You also have to pay your taxes, you have to pay your super for your employees, and then you got to make sure that the numbers that you report to the government are correct on all sorts of reporting methods, like with Xero, with your pay slips, and then with your business activity statements, and also then your tax returns. So if you've got like 4 different parts where you report your wages, and if there's one mistake, it would affect all those 4 reporting methods, and then most likely it could trigger an audit. So that's why it's really important to really understand how payroll is done. And as I mentioned before, payroll, the way business owners learn is through making mistakes, because there's so many things you need to know about payroll that can cause you to make a mistake. For example, when it comes to payroll, you have to deal with income taxes, wages that get, and then the wages that actually get paid to the employee. You need to understand when and why or how to pay an employee. It's not just when, because you need to understand, okay, what is a bonus payment? And what is the difference between bonus and wages? Or what's the difference between commission versus normal wages? Okay, you need to understand the pay rates for every employee. Believe it or not, you can't just pay an employee $5 an hour. There is a minimum requirement of an hourly rate that you have to pay. If you make them work on weekends, there is also legal requirement to pay them like time and a half or double. So there's so many rules, and it gets quite confusing. Even for someone that's been in accounting for 17 plus years, I sometimes still make mistakes on it because it's so complicated. And one slight change can just make you forget something. For example, one of the employees decide, hey, Davey, can I just get a loan from you, payment in advance? Because it happens sometimes. They're going through some tough time, and that could easily make you do something wrong and make you pay an employee incorrectly in terms of the tax withholding or superannuation. And then that affects you. And then if you do it for a long period of time, it could trigger an audit and it can affect you quite a fair bit. So what are the common mistakes I see employees make? The most common mistakes that I see normally is to do with the PAYG, superannuation, single touch payroll, and then the payroll tax. It's funny, payroll tax and PAYG withholding, which is income tax, is 2 different things. So PAYG withholding is when you're an employee of a company and when you're working for someone, you agreed on a price where you'll get paid $20 an hour, for example. The ATO would request your employer to withhold a part of that $20 to pay for taxes. So instead of you getting $20, you get $15, and then $5 will go to the government. So that's PAYG withholding. That's income tax. But there was also something called payroll tax that a lot of people don't know about. So payroll tax is the New South Wales or Queensland or Victorian state governments. They also require your business, if you're a business that pays a specific amount of wages, for you to pay wages tax on your total wages that you pay as well. And that usually is about 4 to 5%. Most people don't know about that because for small micro businesses that don't pay wages of over $1 million, you don't need to worry about that because there's a threshold. If you pay over $1.2 million in wages a year, that's when payroll tax comes into effect. If it's under $1.2 million a year for New South Wales, you don't need to do payroll tax. Okay, so that's kind of like the compliance that you need to think about. But let's just start easy. And I'll just quickly spend like about 5 minutes just explaining how payroll, what you need to do in payroll. So when you first employ an employee, what happens is you need to work out what to pay that person. But there are 3 things that you also need to give that person. So I'm not going to go into specifics of like HR, recruitment and all that stuff like that. Let's just say that you already got this person, you already agreed on the price, the salary or whatever it is. The next thing you need to do is you need to collect the documents and make sure that you put in the payroll properly, or the employee properly in payroll. So the 3 things you need is a contract. Contract isn't compulsory, but I would say that as a business owner, you should definitely get some sort of agreement in place, okay? Whether it's like a 1-pager or 2-pager, you can actually get that information online. So let me just quickly share my screen and just show you guys how to do that. So what I would recommend is that if you are based in Australia, obviously, you would jump onto the fairwork.government.au website. This website gives you a lot of information. So this is probably the website that you should be going to first time doing payroll or employing yourself or employing employee. What you could do is click on the website, click on starting employment, and you'll find a whole heap of information here. This information tells you and explains what you need to do when you first start employing someone. It talks about the rules, talks about specific things that you need to be careful of. One thing that it also gives you is it gives you resources. So it also gives you templates. So you can go into templates and you can download specific things related to payroll. It could be pay slips, it could be agreements, timesheets. And one thing I usually get, especially if you don't want to get a lawyer, is you can get a letter of offer. And that letter of offer or employment letter, it kind of like details down specifically the rules. So I don't know what it's called here, but if I go letter of offer, Fair Work on Google, it should come up. Employment contracts, so that's what they're calling it. So yeah, here it is. So you can click on this and you can find it on the database. I don't know which one. Oh yeah, here it is. It depends on the full-time or part-time. So you just need to find specifically which one is right for you. And then you just download that for your employee. It just depends. Okay. But there's a whole heap of templates that you can download and you can use that one as well. When you want to communicate with your employees and it's like a formal communication, they have templates on that as well. So this is really, really great resource for you if you're first time in business and first time employing employees. It's great for you to jump onto this website to look into more information about it. Okay, so that's the first thing you need to do if you're planning to employ employees. Next thing is there are 3 documentations that you need from your employee that some employees forget to do. So the first one is obviously the employment contract. The second one is your tax file declaration. This is something that you may have done yourself. It's not you setting up a TFN, it's them you collecting their tax file details, tax file number details, and then reporting to the government that you are employing this employee. So the only way to identify that employee is with their tax file number. So that's a form that you send over to them. You can find that online on the ATO website. Download it from the ATO website. You can access the form here. Yeah, so pretty easy. TFN declaration looks like this beautiful looking thing. I think it's just downloaded it. But if you can't find it that well because the user UX isn't that great, you can actually download it using this form as well. TFN declaration, PDF download. Okay, so then you just send that to them. You can find it everywhere, to be honest. Yeah, so this is the form here. Order online, and then it will just download. But anyway, it looks like this beautiful looking thing here. So you get the employee to fill that out. And once they fill that out, they give it to you, and then you just file it and you put it into your payroll system. Okay, so that's the second document that you need. And the third document you need is, yes.
Can I just double check?
Yes.
With that form, you may just file it in your own records. It doesn't actually, the actual form doesn't need to go to the ATO.
The paper form doesn't need to go to the ATO at all, but you still need to report it, but you only report it through the payroll system.
Okay, cool.
Yeah, so back then, I think it was like 10 plus years ago, you actually mail it to the ATO. But then, like, think about it. How many employees get employed on a daily basis in Australia? There's probably thousands. So the ATO realized that was probably a bad idea getting it mailed to them. So they started telling everyone to file it with the payroll system instead. Great question, by the way. And then let me just quickly explain the third document you need, which is the super choice form. Okay, this one here, I think a lot of people don't do. People forget about doing this super choice form. So the reason why we had to do this superannuation standard choice form is because we actually have to give the employee a chance to choose which super fund they want to use. It's a bit strange, right? But we can't choose for them. But most employees that maybe their first job, or they're quite young, they don't understand what superannuation is. So most likely, when you download the super fund and you explain a super choice form and you explain it to them, you just tell them, hey, if you don't have a super fund or you don't understand it, just have a read of it here and go do some research online. But you can tick on my employer's default super fund. That means that the employer, which is us or the business owner, would need to choose a super fund that they want to use. And there is no recommendation, but the most common ones out there are Australian Super, Rest Super, Host Plus Super. They're the ones that most businesses use, but there are other ones out there. There's heaps actually out there that you can use as well. But if your employee doesn't really mind or doesn't really care and they don't know how to fill out this form, tell them to tick this, my employee's default super fund, put in their details and just sign it. That's all you need them to do. That means that tells them that the employer is going to choose for them. So the employer then goes in and completes this, and then they just file it, keep it somewhere. Apparently, you're supposed to keep it for 7 years. I've had and been through audits, not myself, but like with clients, and they specifically ask for this employer choice form. It's crazy, right? And some of the employees have disappeared, or they don't even, they can't contact them anymore. So then it starts getting into an issue, and then you have to like spend so much time looking for that employee just to sign this form. But if you don't have this form, then you can't really actually pay super, and that causes an issue for you, because if you keep delaying super, then there's something called like Supercharged Statements, which basically means that there's interest penalties and late payment fees that you have to pay on top of super, because you're technically like withholding the super from your employees, even though they're not providing that information to you. But if you have proof that you've given them a choice, then it's up to them. And so you kind of have to produce documentation to show that you've actually done what you're supposed to do. So there are three things. First one is have an employment contract, not compulsory, but very silly if you don't have one, because if something goes wrong, then you have to fall back on it. But if it's just it's a verbal agreement, then they can argue a lot of things. They could say that, the pay rate should go up, and you promise, if you have a contract in place, they sign it and you sign it, then it's clear that if anything bad happens later on down the track, that you can go back to that contract. Second thing that you need to look out for is the TFN declaration. And the third thing is the super choice form. They are the first three things you need. Once you've got that, you need to get a software. Okay. You can't employ people now in Australia without having some sort of payroll software. Okay. Because ATO has gone online. So, and what I mean by that is the thing called single touch payroll. So single touch payroll has completely changed the game now. You used to be able to do things on by forms, which is still happening with the TFN declaration and the super choice form. But you actually grab that information, and then when you go into software, you can actually jump onto adding an employee. So you go to new employee, add an employee, and there is a section here when you put in the employee's details. All right, once you fill out the employee's details, which is from that form. For example, let me just jump into one of them. This is the part where it's the TFN declaration. You put in the TFN declaration here. This here is basically all the information from the tax file number declaration. Talks about tax withholding, talks about how much to withhold. And it asks specific questions. And one of them is like the claim, the tax-free threshold, and help or HEX debt. If you don't tick these correctly and you don't follow the TFN declaration or explain that to your employee, you might be withholding too much tax from your employee, or you might be withholding too little. And believe it or not, they blame you always if this is done incorrectly. So if they have to pay a tax, if they don't get a tax refund, or if they have to pay taxes at the end of the year, because you ticked or unticked these incorrectly, they would blame you, and then they get a bit disgruntled, and it just makes the relationship a bit tough. They think that you're trying to like not pay them properly. Another thing is the super. So when you go into employment here for Xero, the accounting software, if you use it, you'll see at the bottom here that you have to add the superannuation details as well for the employee. So you have to make sure you update this. So if you don't put this in, then the employee super doesn't get paid. And as a result, they blame you again. They think that you're stealing money from them. And technically, you are, according to the government rules. You are taking money from them. So therefore, they fine you and they charge you interest. And they're not very nice about it. Reason why they're not nice about that superannuation is because super is not the ATO's money. So super is actually the employee's money. So they can go harder on you guys. And so as a result, they actually charge a lot of fees. It's like about 10% interest every quarter. So it adds up. So that's why we recommend making sure that you put in all this information correctly. Vanessa, you asked a question about Xero. Yes. So yeah, accounting softwares are starting to get quite expensive, especially Xero. So Xero is quite expensive when it comes to the accounting software, but it does have a few functions for payroll. So it does. You could probably get a flexible one for just payroll specifically, but if you don't, there is also softwares like Payroller. That's another software that you can use, and I think it's cheaper. There's another one as well that's quite good. Man, I forget the name of it. I remember it and I will let you guys know. But it's a good app that I've been using. QuickBooks is another one. QuickBooks is really great for US, but when it comes to Australia, they're still trying to fix it. So it's a US software. It started originally from US. So when they're trying to like bring it to Australia, they just customize what they had, or they purchased another software and brought it in. A quick search online, you can find a lot of different types of payroll softwares out there. Xero is a bit more expensive, but the beauty of Xero is that it does a lot of things quite well, and so it should technically save you time.
Hey, David, quick question.
Yeah.
Regarding to the three things you mentioned earlier, right?
Yes.
Contract of sale, the tax file number declaration, stuff like that. If you say employee, right, you pay yourself, do we need to do that? Do you need to collect those one, or until for example, ATO will audit you and then you can do that because you, right?
Yeah. So technically you're supposed to do it on the day one, but if the software, yeah. Like, look, if they audit you and they request for you, it's funny. They have done that before, and I'm like, come on, guys, like, are you seriously requesting it for the director? And they said yes, and I was like, well, let me ask the director. And then the ATO officer actually said to me, just get one done. I recommend you should follow the rules, which is do it, but then you just have to file it somewhere. Yeah. But look, the chance of them auditing you and asking you specifically if you've done it right for Super Choice, most likely very, 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 very low chance. If they're auditing you, it's because they're auditing someone, like they want to look at your employees, like your external employees. Okay, most of the audits when it comes to payroll, it's because someone dobbed on you. I think the chances of an audit, most of the most common audits with the ATO are someone dobbed on you, or the second one, data matching. So if it's data matching, when it comes to your personal super, it's because you may have done some incorrect mistakes on the software. So they're not really technically looking for the super choice form. They're more looking, or the TFN declaration, they're more looking because you made a mistake somewhere. So they will ask you questions about that. Yeah. Super choice form, they do ask for if someone's dobbed on you. I've seen it happen before. Anyway, I won't go into specifics of this, but let me tell you the few common errors that people make. All right. So the few common errors people make is that when they add an employee and they go through the whole process, they forget to look at the employee's leave entitlements. So obviously, if you don't know much about leave, you need to understand it and you should look at the Fair Work website. But they forget to put in leave. So you forget to click this button here and assign leave types. So in Australia, just to explain, the minimum leave requirements is that you need to pay someone 4 weeks of annual leave if they work full-time with you, and 2 weeks of sick leave, which is also considered personal leave. That's paid leave, but they accrue it over time. They don't just get it straight away when they first work with you, but you need to accrue it. Accrue it means that you need to take it up depending on how many hours they work. So you need to click this button here and then sign the leave properly and fill in this information. If you struggle with this, I won't go through it now, but I would explain it to you when we do zero training, or you can contact our friends or our clients. So this is a really common problem. And the award rates are very complex. Do you have a payroll software that can manage the award rates? There are softwares out there called Employment Hero, for example, that help you with this. You can definitely check them out here. Employment Hero is one of them. I think there's other softwares out there that do it. I don't use it that often, so I can't say for certain that this would solve your problem, but they do advertise that they have, they do look at all the award rates and all that stuff like that. So please feel free to check it out. What the heck is award? What is an award? So award is basically the rule book for specific industries in Australia. So some industries in Australia, they considered, it's not that they're considered a low level, but they're more considered in the sense that they don't have a ability to negotiate their pay and they don't have the power to negotiate their pay and entitlements as much as, working in an accounting firm and working in corporate. Okay, so because it's partly because they don't know the legal information as much. So therefore, the government has designed these awards or these rules for those specific industries to cover those industries. So you can find all the awards and the minimum pay and the details of the guides and all that stuff on Fair Work. And so when you're employing an employee, say you're a hairdresser or something like that, I recommend trying to find the award or the details on Fair Work. And the best way to do that is click on Pay Calculator and then start the process of putting in the information of the employee to find out that information. Sometimes your industry doesn't have an award. So especially if you're working in office or corporate or professional services or, something that, you have to study or go to uni for, most likely there might not be an award for it. And as a result, then you just negotiate because the pay is high anyway. But there is minimum pay. It's more than likely for those industries that are close to the minimum wage. Minimum wage is about 20 something bucks. So for example, if you type in hairdresser and you can type in the apprentice, what level in that and stuff is, and then you click on next and you can search the hair and beauty award and then you can fill out all this information. So let me just quickly go forward. Say that person's level 3, you can actually go into specific details to find out what is considered a level 3. And then say full-time, for example, click on over 18, click on next, and then fill out all the information. It would actually specifically tell you how much you should be paying that person. Okay, but that's the minimum entitlement. You could actually pay more. It's up to you. But this here, you need to do this check first before you make that agreement or payment to that person. So you don't really need a software to do it. You can actually use this platform itself. It's quite good. But if you look at the Hair and Beauty Award, so if I go for example, Hair and Beauty Award, and then download it, it's so long. This is the whole thing. So if you were to read it, it'll take you years to read it. I would try to read it. If you can't read it, then get a HR specialist to look at the pay for the industry. What other common mistakes that people make is tax withholding and wages. So they need to make sure that when you put in the employee's pay rate that you do it correctly. But when you first add an employee, you get a bit confused. You're like, well, do I pay them on a weekly basis, fortnightly basis, or monthly basis? Okay, so that's up to you. So you need to decide what you prefer to pay. Some industries prefer to be paid on a monthly basis. Some industries prefer to be paid weekly and some fortnightly. Okay, corporate world, sometimes monthly, it's allowed. Retail, most likely weekly and fortnightly. Okay, so just so you know, you need to make sure you determine that. And once you've done that, then you can actually put in the hourly rate that you've agreed on with that employee. And then the system will spit out the pay slips. But when you do that, when the system spits out the payslip, you need to connect the Xero file or the accounting software with ATO. So remember how I mentioned to you guys that the ATO does not use paper forms as much anymore for when it comes to payroll. They need your software to connect with the ATO online, and they would then you will need to submit the payslips through the software to the ATO, and that's what you call single touch payroll. It sounds fancy, single touch payroll. It's not really physically like that, single touch and then it's all good. It basically means that it's a mandatory process where the employees have to report real-time wages, which is PAYG, superannuation, net pay to the ATO. By doing that, that means that the ATO knows more information. They know when you're making errors. They know that you're not paying your super. They know that your taxes aren't getting withheld properly or paid properly. So it's actually important now more than ever to get your payroll up to date and properly and accurate as well. Back then, people would just like wait till the end of the year to do their or the group certificates, and the ATO won't even know if you've employed these people for a whole year. So there was a lot of issues with wage theft. Nowadays, there is less. Well, there still is wage theft, but they've now put in new laws to protect the employees and made it more harder for employers. So we had to do the right thing. I think it's a good thing and a bad thing at the same time. So obviously for new time employers, if they make a mistake, they get penalized quite hard. And sometimes it's not their fault. It's just an accident. They didn't know about it. Unfortunately, they still get penalized. So it's up to us accountants to help explain that to employers. If it's a PTY limited company and the sole director does work, must they be paid the award or are they considered self-employed? Yeah, so in the end, these awards are to protect you. But if you agree on the fact that you're happy to be paid less, then it's okay by the government. The government can't control you and your business. In the end, you're a director, you can forego those wages. It's only there to protect the external third-party employees. So they really don't care about you too much, which is unfortunate as well. Yeah. As I mentioned, single touch payroll gets reported to the government. Government knows so much more information about you, so they can data match. So you need to make sure your super is paid on time. There is a due date for superannuation. So super needs to be paid, how often is it? Every 3 months, every quarter. All right. And it's 28 days after the quarter ends. This is the due date. Sorry. 28th of October, 28th of Jan, 28th of April, and 28th of July. So 28 days of these. Okay, you can pay earlier. You can pay on a monthly basis. I actually recommend paying on a monthly basis. Okay, the reason being is because you got to get used to it. What's happening is that the government's trying to implement a new thing, which is super payday. I think it's called Payday Super, which in the 1st of July, 2026, so next year, they're going to try to make employers to pay their super not after the quarter ends, but now on the day that the payroll gets done as well. So they're trying to implement it. So I recommend if you're paying your super on a quarterly basis, you should start moving to monthly just to get used to it, because eventually it'll be like every week or every fortnight. So it's important to make sure you manage your cash flow well. So that's one thing. Super is really important. And I think that if you don't do it properly and you don't pay your super on time, there's that thing that we call supercharged statements. So supercharged statements, this form that you have to tell. If you make a mistake with your super or you don't pay your super on time, you have to tell the ATO that you made a mistake. How crazy is that? The ATO says that if you don't, that we need you to fill out an SGC form and tell them that you've made a mistake. So a lot of, obviously, not many people are filling these out. But now that the ATO knows that you're making these payments late or you haven't made those payments because you're reporting it through single touch payroll, then they will send you a letter or they start calling you. And if you don't do anything, they'll audit you. So it will make it worse. So that's why SGC is really important. Okay, so one thing that also gets missed, plus the admin fee. So SGC is quite expensive. So SGC charges is really, really expensive. They charge you like, I think it was $10 per quarter per employee. And then on top of that, 10% or $20. Yep. So super guarantee charges is they make you report that you've made a mistake or paid late, and they make you pay $20 for every employee that was late per quarter. So if you're late all 4 quarters, you're paying 4 times 20, like $80 at least. And then on top of that, $80 per employee. And then on top of that, they're charging you 10% on the super that was late per quarter. It can make or break your business. I've had cases, not many cases, in my old firm where the employer wasn't paying their super at all, and the ATO audited them, and they did the SGC forms properly for 3 years, the last 3 years, and it was like a $250,000 tax superannuation payment bill, and they will go after the director. So you know how you've set up a company to protect yourself, but there's these rules where they can go through and go after the director. One of these rules are the employer obligations. So if you're a director of a company and you had employees and you weren't doing the right thing by the employees, they can go after you personally. So that's why I think it's really important that we have a catch up about payroll, because payroll needs to be done properly.
Regarding to the SCG, right?
Yep.
If I have my salmon as a super fund, right?
Yes.
And I'm a self-employee. If I pay late, after the day they say it's the due date, is there anything impact to company or?
You still have to pay it on time. Crazy, right? They still will charge you the SGC, and they will still require you to lodge SGC. Are you talking a day late, or are you talking about like weeks?
Like about a week or 2 weeks, something. I forgot last time.
Yeah. So technically you're supposed to do it. And the worst part about this is the later you do it, the more interest it gets charged as well. So because it's per quarter, remember, first day of the quarter to the date that you lodge your SGC. So if you don't lodge it for, say, 2 years, then it's 10% for 2 years. If it's a few days late for a few a few weeks, and it's for yourself, the ATO may be lenient, and that's where you ask that question. I know a sole proprietor. Is that a sole trader or is it sole? It's a company owner.
Yeah, a friend who has his own business.
Yeah, is it a company or is it sole trader?
I think it might be sole trader. Crazy,
right? This is some crazy thing where it's like sole traders, they don't care about you because you don't have employees. Well, you're not considered an employee of your own company, but if you're a company, then if you pay yourself, you're considered an employee. So therefore you fall with those rules. So there aren't any specific rules in Australia that protect the sole traders and force sole traders to pay super. Yeah, so sole traders are okay. They don't need to pay their super. I think it's a very silly mistake that they're going to have to learn in the long run, because I think that that's all good. But super is actually really, really, it's probably one of the best in Australia. Superannuation rules are actually one of the best things the government's implemented for us. You won't see the benefit now, but in 20, 30 years time or 50 years time, you'll see so much more benefit. Less people are on social security. Okay, maybe this is an economics thing, but yeah, less people on social security. More people have their own savings that they can rely on, so they don't have to continue to consistently work, and they will have some money saved up for their retirement, or something when something bad happens to them, then they can't work anymore. You don't want to see like your older parents, and when they're 60, 70 years old, still trying to work, and they end up becoming homeless as a result. And that's why in other countries, even though it's a Western city, it's you see a lot of elderlies homeless because the superannuation and social security isn't the best. I asked the question: if you subcontract through other larger business, are you saving the client business payroll tax? Is payroll tax only applicable to permanent employees? Does it include subcontractors as well? Okay, that's a very good question. If you get a contractor to do work for you, they're a contractor, so you don't have to pay their taxes, you don't have to withhold any taxes, you don't have to collect tax file numbers, employment contracts, but they could still be a employee for super purposes, and you still need to pay their super. So there are a lot of businesses that try to set up put everyone on contractor, so therefore you don't have to deal with super. Okay, the only way to avoid super properly is that you're not paying that person for their time and efforts. The rules stipulate in the superannuation rules is that you are considered a worker for superannuation purposes if you actually put in your effort, your labor services, and your you put a personal exertion and you help that person. For example, if I hire someone that's a contractor, but if I pay them for their time to do some work for me, then technically they still a employee for superannuation purposes. So I have to pay super for the contractor, but I don't need to pay their taxes. But if that person set up a company, I'm not paying and I'm not working with that contractor that's an employee, because that person, that entity is not a person, it's a company. That company can't be a worker. So that's why you'll see in your situation, because you're in the construction and building and tradies industry, that you will see that a lot of businesses do this. Okay, a lot of tradies will set up a company for their own benefit because there's loads of risk, but they also set up a company because then they're not considered employees anymore or workers for superannuation purposes, and so therefore you don't need to pay super for that person. Okay. Is it the right thing? I don't know, but I just see a lot in that industry. To answer your question, technically, there is a lot of companies in your industry that advise their even the employee wants to do that as well, but the employee then instead of becomes a contractor instead for the business. They might finish their apprenticeship, so they don't really need to work for that employer anymore, and they want to work for multiple builders, for example. So therefore, they just then set up their own Pty limited company, then contract their services out to other businesses. That's technically right. They're running a business. So therefore, you don't have to deal with their super anymore. So those businesses that pay that apprentice doesn't need to pay for super as well, as long as they have a company. But if they're a sole trader, then there is a case where you have to pay super still. Do you get a deduction on the interest if you pay it early? Is this to do with supercharged statements? I think you are saying that supercharged statements, technically you're not allowed to claim the interest on it. So yeah, it's crazy, right? The ATO doesn't allow you to claim the interest on supercharged statements. But anyway, don't count me on that. I'll double check for that. But I heard that from memory that they don't allow you to claim interest, a tax deduction on interest for super. But even if this is not the case, they're trying to argue and trying to push that through. So the last few months, I've saw the Labor government trying to implement a new rule, which basically says that if you're late on paying your taxes, we're not going to allow you to, we're going to charge you interest, and we're also not going to allow you to claim the tax deduction on it. So if it's not a rule yet, it may be a rule later. So it's unfortunate government's having so much control. Yes, that was under SGC. I mean, if you're late on the super payment, say by 3 months and charge interest, but you already paid after 1 month. Okay, yeah. So if you're late, I think it's late on a specific time, right? Anyway, let me get back to you on that one. So yeah, a specific time, after a specific time, you can't claim the interest. All right, so that's supercharge. Okay, now I want to talk about payroll tax. Okay, so payroll tax is very special. So let's just go to New South Wales for a second. So there's payroll tax is, again, like it's with the New South Wales government. Every government has a different payroll tax. So let me just see if I can, every state per state. So it's crazy. Like, see how, like, if you type in payroll tax, you have New South Wales, and then there was ACT, there's, see how there's ACT, and then there's like Queensland, South Australia. There's all those different states, and it gets really, really confusing. So every state has their own rules and thresholds. And so you have to click on each state to kind of figure that out. So, but in New South Wales, you have to report if you're over these thresholds here. Basically meaning that in New South Wales, if your threshold is over, I think it was 1.2 mil threshold payroll tax, you have to deal with super, and the payroll tax, and the tax rate is 5.45%. So this threshold of wages, it's not just wages, gross wages, it's also inclusive for super. So you could be like paying $1.1 million a year on wages, and you will be over the threshold because you add superannuation as well on it. Crazy thing is that you don't lodge this on an annual basis, you lodge this on a monthly basis. So payroll tax is very confusing, and you don't even sometimes know that you have to pay it until like they audit you. And New South Wales government is different from the ATO. Australian Taxation Office is federal, and New South Wales is it's state. So therefore, state government does their own thing. The crazy thing is that state governments like ACT, Queensland, they data match and get their information from the ATO. So when you lodge a tax return, they can grab that information, and if they see that your wages are over 1.2 mil, including your super, then they will audit you. They won't audit you in the first year. They'll wait like 2 or 3 years and then audit you, and they can get a whole bunch of taxes back. If they do 1 year, they won't get that much. Also because they're slow. That's when it comes to payroll tax and super. There's also other issues that you need to be careful of. It's also collecting, like I said before at the very start, you need to withhold and keep the payroll information for 7 years. The reason why you need to keep that information, and you also need to protect the employee's data. This is like personal information, license details, passport, tax file numbers, personal address. That stuff there is very important for you to keep. So if you release that data online, for example, you can get into a lot of trouble. So make sure that you keep that information in a safe place, and you don't just actively just provide your employees information. It should be a given that you should know that. So another issue is that some businesses, to avoid all the payroll confusion, they just go and get their employee to be a contractor. You got to be very careful of this. Obviously, if you push them to be a contractor and you influence them, the ATO has some specific rules that can penalize you. They can. So I've had a case where a truck business, a client that's been with us for many years. I'm talking about like 8 years in my old firm as well as this firm. And what happened was that they had contractors for the truck drivers. These truck drivers, they employed some people, like 3 or 4 people on the books. And then the other truck drivers, they put them as contractors. So they said to the truck drivers, you're contractors, give me your ABN, make sure you get insurance, and I'm going to pay you, $50 an hour. So they agreed on an amount, and they paid them $50 an hour. The reason why they put them as contractors was possibly because they were temporary. They weren't working that many days. They weren't sure on how good they were, so they didn't want to employ them. But over time, they started working with these contractors, and they just left it. For the next 3-4 years, these people were working full-time, and they were still considered contractors. So they didn't withhold taxes, they didn't pay super. And what happened was one of those truck drivers, nothing wrong with the industry, just never did their taxes. And then out of nowhere, they did all the taxes all at once, probably because they got audited. And when they got audited, what happened was they reported the contractor income as wages. They went into the tax return and they put it as wages, gross payments. And obviously there was no tax, so they put zero tax. Or no, they didn't even put zero tax. They just put it as wages. That flagged it with the ATO. Then the ATO went and audited the client. The client then didn't do anything wrong, or so they thought. They had to go through the whole audit. And what happened then was they looked at super choice forms. They looked at withholding tax. They looked at super was paid properly for all employees, including contractors. And because some of these contractors were sole traders, the ATO then went and said, no, you haven't done it right. We want you to pay super on all these truck drivers. Not for 1, maybe 3 or 4, and for the last 3 or 4 years. And as a result, he had to pay like $100,000 of super plus interest plus late fees. Not because they did anything wrong. Well, technically he did. He didn't know that he was supposed to pay super for the truck driver because it was their personal exertion. They were considered an employee for super purposes. He ended up having to refinance the money out of his home loan to do that. He was really upset. He wasn't really happy with the worker as well. But he couldn't do anything about it. But yeah, let's just say that the relationship with the worker and the employer they weren't happy with each other after that. So that's something like that happens quite a lot when it comes to wages and payroll. The main things you need to look out for: the awards, the contractor versus employee, the superannuation, the withholding tax. Leave is really important, and making sure that you report a single touch payroll properly and make sure that you have the payments accurately. So loads of things you need to think about, and it's just a really good reminder for you guys to think about all those things and make sure that you're doing it right for your business. And just because you work for your own company and you're the only employee doesn't mean that you can get caught out. It's never happened to my clients where they get caught out and have to pay their own super, but I've seen it happen for other accountants and their clients. So I had a case where one of the accountants came to me and said, Davey, have you ever had this case before? And then I said, what's the case? The case was that a client was audited for 3 years worth of unpaid super, and that super was for the director, which was the client. And I asked him, that's crazy. Like, why is the ATO making him to pay super? It's his own super anyway. And he said, I don't know, to be honest. Like, I don't even know how it happened. But I asked him, so did the ATO end up making him pay it? And he had to pay it. So he had to lodge the SGC forms, pay the extra administration fee, $20 per quarter per year as well, and per employee as well, and which is just for himself. And then he also had to then pay all the interest payments to his own super fund. Very ridiculous. This person was a young guy as well. Look, he should have done it correctly when he was paying himself, but he just didn't do it properly. And as a result, it ended up costing him a lot of money. Do you blame the accountant? Yeah, you could probably possibly blame the accountant as well. In that case, we try to remind our clients. But yeah, anyway, got audited 3 years, even though he was a director of his own company. He just didn't pay his super on time. So if you employ an employee and that person is based in another state. So this is a bit confusing. So I actually made this mistake myself. Sorry. So I didn't make the mistake. I thought I was right, but I was wrong. So what happened is I have an employee that's based in Melbourne. So I included them into the New South Wales threshold. But then because that person's based in Melbourne, that person's in the Melbourne threshold and not in the New South Wales threshold. So it's based on their location. You think that you're getting away with if you've got like, say 5 people in New South Wales and then 5 people in Melbourne, for example. That means that you've got 2 thresholds, right? No, that doesn't work that way. It actually works negatively to your business if you've got multiple people in different thresholds. The reason why is because the payroll tax calculation is based on your overall wages. So let me give you an example of what happens. So say that you have like $1 million worth of New South Wales wages, okay? And the threshold for New South Wales is 1.2 mil. And say that you have then another 500K worth of wages in Victoria, because your employees are based in Victoria as well. So you've got two locations. Even if it's just online, even if you've got people just working remotely, they consider 2 locations, two states. So then overall, you've got 1.7 mil in wages. So you're actually over the threshold, but because you're under the threshold for each state, most people don't lodge the payroll tax. That's the wrong way to do it. What they do is they actually apply a percentage against your threshold. So because I have $1 million of wages in New South Wales, they do 1 over 1.2 mil, whatever that is, say it's about 80%. They apply 80% onto that 1.2 mil threshold. So now my threshold drops. My threshold goes down under 1 mil. So I'm actually over the threshold now. So that means that having more employees in other states makes you lower your threshold, because they take a percentage of your threshold based on how many total Australian workers that you have, not just on each state. The state having wages all over Australia and employees all over Australia doesn't really help with payroll tax, and payroll tax starts getting really confusing. One thing you need to be careful with is the 5% is a lot of money. It doesn't seem like it's a lot, but if you do say $100,000 times 5%, that's like $5,000. If you haven't paid your payroll tax for 5 years, that's 25 G's. And then there's tax on top, there's interest on top of that. Great thing about payroll tax is it's tax deductible, but worst thing about it is that actually it demotivates employers to actually employ employees. I think it's one of the worst taxes that were created in Australia. It doesn't make any sense. Why would you tax employers more because they're employing more people. Yeah, doesn't make any sense to me. Anyway, shouldn't say too much about it before I get fired by the ATO. Can you pay salary wages without proper rhythm? Oh, like skip a month of salary if a company makes less money. So this is, you're probably talking about if you employ yourself, like for the director or, you know, for a family member, of course you can. You can like play around with the wages. It doesn't really cause any issues for audits. There's a general like idea that some clients think that if you like play around with your monthly wages, it might trigger an audit because it looks weird. It doesn't look weird at all. It's actually quite normal for businesses to go up and down with their wages, especially in certain industries. And if you're a startup business, it happens all the time. I have some clients that don't pay, they take money out of their company, and this is another deep dive, and they call it like drawings or loans. And then at the end of the financial year, they decide, you know what, all the money I've taken out, let's treat it as a wage. And they take up like a massive wage payment that they've already received, but they take it up in June, for example. So it's all good. It doesn't have to have a specific rhythm or like a fixed amount, even if for external employees as well, because some businesses have seasons. So during Easter, for example, if you sell show bags, which we have a client that does, then that business will only be really busy during Easter and other specific seasons. So you don't actually have employees for the other times, as much. So yeah, makes sense. Cool. All right, I'm just going to call it a day and thank everyone for joining, and hopefully this was helpful. If you have any questions, feel free to let me know and reach out to us. But yeah, payroll is really important. I got to stress it to you guys that if you make a mistake, it can get really, really bad. So just make sure that you ask us the questions. Every question that you ask is not a silly question at all. Like always ask, because if you make the mistake, it means that you may have to pay a lot more in the long run. We pick this up during the BAS periods. We pick this up during doing your taxes, or we do this during bookkeeping as well. So it's better that you tell us about it first before you go and apply it, because you might spend a lot of time doing it and you might have to go back and fix everything. So it's always good to let us know before doing it. Cool, that's it. All right, I'll see you guys later.